Good evening, everyone. How are you? I hope audio and video is okay. Quickly confirm if everything is okay, guys. Is my audio okay, guys? Good evening, everyone. Perfect. Great. Uh, we'll start the session today with a quick round of introduction, guys, so that we get to know each other much better. And if you have any questions, I'll take up that also. So, can you please introduce yourself? So, first, I'll introduce myself. Hi, everyone. My name is Abhinav Raparia. I'm a qualified CA, CPA, MBA. I have almost 16 years of experience working with various corporate consulting firms, private equity, and currently I'm running my own angel investing firm. Besides my corporate career, I take sessions for US CPA, CMA, enrolled agent, CFA, and various business and management courses. I train almost more than 10,000 students in various verticals itself. And I've been teaching for almost 12 years now. So it's been a long time I'm there. So that's a brief introduction about myself, guys. Can we start a quick round of an introduction with your name, your education, what you have done, guys? Where are you currently working, if you are working? And have you done either of the classes earlier, part one or part two? Have you done any of the classes with us? That's it. I'll keep taking your name one by one, guys. Please unmute your mic and introduce, please. I'll allow you to unmute your mic. So please introduce your name, education, work, and have you done any of the part one or part two earlier? So Ananda, we can start with you. Can you please unmute your mic and introduce?
Okay, myself is Ananda Krishna. Okay, currently I'm working as a finance manager in a different country in a West African location. Basically, I am my ACCA intermediate holder and I am a postgraduate in commerce.
SCW.
ACCA intermediate.
CW. Okay.
Yes. And I am a postgraduate in commerce, MCom holder. And further, I have had one certificate program from IAM. Regarding the strategic finance management. So I came to know about your university, your institute. So I am very happy to join. I am very eager to study.
Have you done
so I
any
need
of
your,
have you done any of the classes part one, part two?
Sorry?
Have you done any of the classes of part one or part two?
No. This is my first time.
Okay.
This is my first time.
Thank you. Thank you so much. Harsh, can you please unmute your mic and introduce? Whoever is the mic, please. Hello. Yes, Harsh.
Yes, sir. My name is Harsh Kumar. I'm a BCom graduate. I am working in EXL as a R2R load senior executive of operations. And this is my first attempt for US CMA.
Thank you, Harsh. Ishika Rao.
Hello, sir. My name is Ishika Rao. I'm doing BBA and currently in my second year from Sir Padampa Singhania University in Udaipur. My passion is watching TV and listening a song in my free time, and I have not seen any live classes. Thank you, sir.
Jasmine Kaur. Can you please introduce yourself, your name, education, work, and have you taken the classes earlier?
Hello, sir. My name is Jasmine Kaur. Currently, I am doing BCom honors from Delhi University. I am in second year.
Have you taken other classes? Just you have taken part one.
Yes, ma'am. Sure, sir.
Thank you, Jayanti.
Hello, sir. My name is Jayanti Kumari. I have done my graduation in zoology honors, sir. I am a non-commerce student.
So have you done any basics? Have you understand the basics of maths? Nothing?
Yes, sir. I am an earlier student in USCMA.
Thank you, Jayanti. Jyoti.
Hello, sir. My name is Jyoti Sharma. I am from Melbourne. I've worked many years, and this is my first attempt to any of the classes. And this is more as a warm-up to see if I can do CPA. So I'll start with
you
CMA.
want to
And I'm a postgraduate in commerce. So when I studied MCom. Yeah.
So you want to move and do CPA, right?
Yeah, if I get through this.
CPA Australia.
No, then yeah, that's right. That's right. But I'll probably try and CMA first and see how I go on this one. Thank you.
Joyce Johnson, can you please introduce yourself? Here, Mike, please go ahead. Karthik.
Hello, yes, sir. My name is Karthik Panchal, and currently I am pursuing BCom from Delhi University. And currently I have no work experience as I am in first year. And this is my first class of part 2, and this is my first attempt. Yes, sir.
Khushbu.
Hello.
Hi.
Good evening, sir. My name is Khushbu. I am doing a BCom first year from Delhi University. And it's my first attempt for USA CMA.
Good evening, sir. I am pursuing my BCom in second year, and it's my first attempt. Thank you, sir.
Pranav.
Hello.
Yeah, hi. Go ahead.
Hi. Good evening. Studying BCom from third year at Harris University, and this is the first CMA, and I'm from Mumbai.
Pranav, your voice is cracking. I hope you guys, you can see me better, you can hear me better. At your end, everything is okay, right?
Yes, sir.
Ruhi.
Good evening, sir. My name is Ruhi, and I'm a BCom graduate from Delhi University. And I have a work experience for approximately 1.6 years. And right now I'm out of work, and I'm started my CMA, and this is my first class.
Oh, thank you. Kunal.
Hello, sir. Good evening.
Yeah, hi. Good evening.
Yeah, sir. My name is Kunal Sharma. I have done my bachelor degree in commerce from Delhi University, and currently I am pursuing my MBA from Subharti University. And currently I am working with Air Galaxy and a Flylo. It's a US travel company.
Kunal, have you done any of the classes with us? Part 1 or part 2?
No, sir. This is my first time.
Thank you, Kunal. Sabha.
Hello, good evening, sir. My name is Sabha, and I have done my BCom from Delhi University, and currently I am not working anywhere. And I just enrolled for US CMA, and this is my first attempt for it. Thank you.
Thank you. Thank you, Sabha. Sadanand.
Yeah, I'm Sadanand. I did BCom and I took part 1. So now I'm working as a finance controller for Discovery Resorts. I have 15 years experience in hospitality accounting.
Thank you. Thank you, Sadanand.
Thank you.
Tanu Sharma.
Hello, good evening, sir. My name is Tanu Sharma. I'm a BCom graduate and currently I'm pursuing on MBA. And this is my first attempt. And I don't have any job.
Thank you. Thank you. Uday Sharma.
Good evening.
Good evening.
My name is Sharma. I am currently doing BCom. This is my first class.
Vaishnavi.
Hello, sir. Good evening.
Go ahead. We can hear you. I'm saying, can you introduce yourself, your name, education, work experience? Have you taken any of the classes with us earlier?
Yes, sir. I'm pursuing my undergraduate BCom.
Oh. Waziha?
Good evening, sir. My my name is Vajia, and currently I am pursuing PGDM, and also I done my CMA classes with you. I think first ek bar aur.
Sure. You have done both part 1 and part 2?
Yes, sir.
Okay, no problem. Vamshi? Shishan?
Hi, good evening, everyone. My
Hi.
name is Ishan. I'm a BCom graduate from Kanpur University, and currently I am working with Qatar Energy LNG, Qatar, and this is my first class.
Thank you.
First class.
Thank you, Shishan. Nikita? If you have mic, please go ahead and introduce. Great. Anyone whom I left, guys, in between, please feel free to introduce yourself, because it's a good thing, guys. Fortunately or unfortunately, we are having the online classes. So, see, if it is a live classes, you guys will meet, connect with each other, share the notes, talk bad things about your faculty. So you can do so many things now. But unfortunately, now we don't have any interaction as such, because we have everything online. So this is a good platform for you to know about each other, so that later on, if you want to help each other in the terms of the studies, in the terms of the preparation, you can help you out each other. Anyone whom I left, guys, feel free. Go or down. Great. So I'll start with that, guys. Anyone who has joined late, guys, we have just done the introduction. I was waiting for more people to join it. We are going to start with part 2, guys, everyone. So CMA part 2, I'm going to start. Okay. We are starting directly with the part 2. I have not done part 1. Will I understand the part 2 or not? Yes. It's not like a movie sequel that you have not seen the part 1. How will you understand part 2? Easily you will understand that. In fact, if you want to write the exam part 2 after the classes, easily you can do it without reading a single page from the part 1. So you don't need to worry about this, whether should I write the part 1 first and then part 2. No. You can write in any sequence. I can write part 2 first also, and then I can write part 1. So after. It's absolutely your choice. Now, our classes, guys, are going to be the weekend classes, guys. Weekend. Today we started a little late, guys, but tomorrow onwards we'll start 6 p.m. to 10:30. I'm keeping it, guys. But if it is too stretched, we'll plan to finish it by 10 o'clock. But I suggest we should keep it till 10:30, so that in lesser number of the classes, we can cover more ground, everyone. So we'll keep it 6 to 10:30, everyone. Saturday and Sunday. If it works, guys, with everyone, during the week, maybe one of the classes in the late evening, we can keep it, whatever the time is convenient for everyone. So maybe around 10 p.m. types, 10 p.m. to 11 p.m. types, where we will just practice the MCQs and the essays, guys. Because in our regular classes, I'll be focusing more on your concept building, more on the clarity of the concept. And it's always a good idea to practice that as the MCQ. My target is, guys, to finish your course by 31st of January. Though in the schedule, we are having first week of February, but let's try to finish within the January itself, guys, so that you are prepared yourself and you can write your exams in February itself. So let's keep the target like this, so that the whole idea is by the time the batch is going on, the 31st January, the batch is going on, please start revising on your own also what we are doing it, so that by the time the batch is over, you have already done one round with me. If you want, in between, I'll keep the revision sessions also, and one you have already done. So the same thing you have done 3 times. After that, you just need the 20 days preparation for yourself, and easily you can write your exams. I suggest you to please do this. This is going to be a great way. Otherwise, you will keep doing the classes and you will not find it very helpful also, because eventually you have to write your exams guide and clear the exams. Is the point clear? Approach which I'm suggesting is clear, guys? Yes, no, maybe. Okay, great. Thank you. Okay. Whatever the topic we are doing, for example, today I'm going to start maybe any topic. Let's say I'm going to start with you ratio analysis. Should we start? Should we revise? Should we prepare ratio analysis before and come that? Absolutely not. No preparation is needed for the classes. In fact, I do not want you to read that, because if you have read this, you are coming with the preconceived notion or something. I don't want you to come with a preconceived notion. I want you to come as a blank slate, because blank slate is much better than the dirty slate. So please do not prepare. Even you can read that, you have the time, don't read that. Please don't read that. But what I want from your side, guys, whatever we have done it on the weekend, guys, right? So please revise that. That is something I strongly suggest you guys. It won't take much. Whatever we have done, let's say on Saturday, let's say whatever we are going to do on Saturday, easily you can revise within 1 hour. Same, whatever I'm going to do with you on Sunday, you can easily revise in 1 hour. So 1 hour for revision, everyone. And after that, you are absolutely good to go with the practice, everyone. More and more practice. If you allow me to have the weekday session, one hour weekday session, I try to do 100% of the MCQs within the class, but it depends on your participation, guys. Otherwise, it is going to be just my practice, not your practice. So I propose, and later on we can find you Saturday class, maybe 6 to 10:30 types. Saturday, Sunday class, Saturday 6 to 10:30 types. During the weekday, maybe 1 hour, we will keep it for the MCQs preparation. So then let's target that 100% of the MCQs we will do in the class. So that the good part is, guys, entire book I will do with you. All the concepts I'm going to do with you. All the MCQs, or at least 80-90% of the MCQs when I have done with you, almost substantial chunk is done for you, right? Entire video would be end-to-end covered for you. Is the point clear what I'm saying, guys? Okay. The last thing which I want from your side, guys, in fact, two things I want from your side, guys. Whenever you're doing the classes, guys, it is more online classes, guys, but please don't do it like an online classes that we are watching on the bed and watching it. Please don't do that. If you are doing it, please do it with a proper discipline, everyone, that we sit on a table and chair, everyone. Sit with a register, everyone, so that whatever I'm saying, you can make the notes also. Sit with a calculator. Very important point. Keep with a calculator so that whatever the figures I'm throwing at you, you can calculate and answer those points, everyone. So do it like a classes. You can do it by sitting on the bed also, lying down on the bed also. Classes will not change, but you will not find the classes helpful, guys. See, eventually, why are you doing the CMA classes? Books are available online also. Books are available everywhere. Why are you not reading online? See, the point is you're doing the classes so that you can find value out of it. So if you want really value out of the classes, guys, if you really want the value of the classes, guys, please do it properly. Only then you will find it much better value. Any type of the calculator is allowed, Jishan. Any other kind of a financial calculator is not allowed, but normal Calci, which we do for Casio and everything, is allowed. You don't need that kind of a financial calculator in the exams. Point clear, guys? Last thing which what I want from your side, everyone, is to have a very good engagement in the class, guys. See, we are doing the online classes, guys. We are doing the online classes. Fortunately, unfortunately, we are not interacting that much. So it's better. What my benchmark, whether you are getting what I'm saying, is just your chat only, guys. So please be involved in the class. The more you're going to involve in the class, whatever the queries I'm throwing at you, you are answering that. Whatever you are having the question, please ask me then and there. Don't wait that let this topic be over in half an hour, I'll ask this question. Or if I ask such a stupid question, other people will laugh at me. Let them laugh. They are not paying your fees. That's your career. You have to be selfish about that. No matter how stupid the question is. I explained that thing already 3 times, but you have not understood it. Please stop me then and there and ask. Everyone has understood in this class, but you are not able to understand that. Please ask me. If you done not asking me, I will not get to know whether you have understood it or not, and you are creating your worst only. Also, whatever we are going to do it now, guys, I run the classes this way only. Whatever we are doing it in the first class and you have understood well, then I might not need that in the class number 20 also. So if you are missing in between the classes, you will not later able to catch up. So please do all the classes. If you are not able to attend the live classes, no problem. See the recordings, but see all this so that you will understand comprehensively what we are doing. Point here. We'll plan that was here. We have not done that. We'll discuss that. Is that okay? Can we have a better engagement in the class? Yes, no, maybe. Great, great. Now, I'll start with this. Is there anyone who has never done finance? Who has never done finance? Who do not understand a basic, nothing about that accounts of finance. Basic, some bit of basics you understand, right? Okay, no problem. See, guys, if you, many of you are coming from the college, some of you are already in the first year or second year of your college. See, college education, school education, those are very elementary level of everyone. Now, what you're doing is CMA is a professional course, everyone. If it is a professional course, the level of the study of the CMA is obviously not going to be so basic the way we are having in school, the way we are having in college also. But is it going to be very hard? Absolutely not. What you need is just one thing, which is consistency. That means consistency. Just keep doing it on a regular basis. Whatever I'm doing with you, just keep revising it. Whatever I'm doing it, just keep revising it. That's all. You don't need to mug up anything. You don't need to ask ChatGPT. You don't need to ask 20 things from the Google in that case. Just listen what we are doing it. That's it. Okay. So follow that consistently, everyone, and we are good to go after that. I hope it is okay. Should I move? Okay. I'll cover few very basic element, everyone, of the finance. Then I'm going to move with that. How many financial statements, guys? Do you understand financial statement? How many financial statements do we have? 3. What are the 3 financial statements? Balance sheet, cash flow statement, and balance sheet, profit and loss statement, and cash flow. That besides that, we are having more some people who have done part 1. We'll discuss it in part 1. We are having statement of changes in the equity on the other income also. Then we are having the changes on the other equity also. But majorly, if I talk about, these are the 3 financial statements. These are the 3 major financial statements. Correct? People who are not aware, financial P&L shows that how much money you have, how much you have earned during the year, or how much you have lost during the year. That means how much profit have you made or how much losses you have made during the year. Balance sheet shows your financials of the assets. That means how many assets I'm having. If I'm having any machinery, factory, furniture, car, right? So how many assets I'm having, how many liabilities I'm having. That means have I taken any kind of a loan, any kind of a liability. So that shows your liability and the assets. Everything. Lastly, it is the cash flow statement. That shows your cash flow positions. That shows the cash flow, how much money you have received and how much money you have paid. If I ask you what is the, see, there is no best statement. Honestly, there is no best statement. But still, if I ask you, which is the most important statement as per you? Which is the most important statement as per you? Cash flow. Why cash flows? Balance sheet. And for cash flows. Balance sheet. Why balance sheet? Why P&L? Why cash flow? Value to bill for cash flow. Why A in A operation. But part P&L shows me profit. You don't care about the profit. Thank you. Question. I don't take it there. Why cash flow? See, honestly, there is no best state. There is no best statement as such as I've started with this only. But I think the most important situation which tells you is the cash flow statement. We can agree to disagree on this also. But cash flow statement is one of the most important aspects. For example, if I'm saying, let's say I am having the profit and loss, and here maybe I'm running a lot of profits. But this profits is not converting into the cash. Why? Because I have given many things. I have done the sales and many sales are on credit. And people are not giving my money. So maybe when my sales is higher, guys, my profit is higher. Point clear what I'm saying? So if I look the P&L statement, I will be very happy that I'm having the profit, which is high profit. But as far as I'm not going to generate the cash faster, what is the point of having that profit? Point clear what I'm saying, guys? So from that lens, cash flow statement is an important statement. Again, balance sheet is okay. It shows me that how many assets I'm having, how many liabilities I'm having. Assets are good with when Anil Ambani started, he is also having a very strong balance sheet. Anil Ambani company is also Reliance Power, Reliance Energies. He is having such a strong balance sheet. In India, in 2008, when the first time the IPO of the Reliance Power came, it was the largest IPO ever. But see where Anil Ambani companies are now. So balance sheet obviously shows that, but again, cash is we call it cash is the king, cash is the queen. That's the reason we call it. Because if any business is not generating the cash flow, what is the point of running that business at the end of the day? Point clear what I'm saying, guys? Yes, no, maybe. 3 statements, everyone. Income statement. She said income statement, balance sheet, cash flow statement. Income statement. Income statement, we make it for the year every. This is something what we make it for the period. That means let's say in a simple point, we make it for the year. That means you are making it for the year. Let's say this full year, everyone. That means full 12 months maybe. Full 12 months. In India, guys, what is the period we follow? In India, what is the period do you follow, guys? For reporting? We follow 1st April to 31st of March. So if I look, what is the current year which is going on in India? 1st April 2024 to 31st March 2025. Is that okay? But in US, everyone, in US, generally we follow the calendar year. 1st January to 31st of December. So current period is 31st of January to 2020. Generally, this is something we are going to discuss and follow this. I'm specifically telling you because whenever we are looking anything, we look from a April to March lens. But now going forward, we will discuss from a January to December lens. Everyone, is this point clear, guys? Okay. Is it possible? Is it possible for me to follow something else? Yeah, possible. It is possible, everyone. In US also, it is possible for me to follow the other period, everyone. For example, everyone, have you heard a company called Walmart? Walmart, everyone. Walmart follows 1st February to what period, guys? 1st February to when will it be end? 31st of December? No, it is not 12 months then. Correct? It is going to be 31st of January. 31st of January. Why is that so? Why are they allowed to do it? Yeah, they are allowed to do it because they want to capture the season here, everyone. They want to capture the entire season before the end of the year so that they can capture the winters over there itself. So that's the reason they are following this here. Can we do that? Yeah, you can do that. Point here, but I will not go for the exception. I will go for this period only. Most of the time, whenever we are talking about, I'll talk about calendar year only. Point clear up till here. Any question till now? It's a common practice, everyone. In India also, if you see, in India also, if you see the typical, if you see the very typical small firms, I'm not talking about the startup companies or something. No, I'm not talking about. I'm saying very small firms. Let's say if you go nearby and there is a grocery shop which is there, or maybe if you go somewhere in your town where you're staying, there's a small retail shop who's selling the clothes. Do they make also the financials, guys? The small retail shop will also make the financials. Yeah, in a way they make it. In a way they have to make it. Otherwise, they'll not get to know that how much we are earning, not earning. Point clear what I'm saying? So in India, they not clear, Kushbu? Here. So they also have to make that. For example, in India, these are the small players. When do they end their financials, guys? When do they end their period? In India, when do they end their period? Generally, financial year, when they close it? 31st March? End. 31st March. 31st March is correct, everyone. More from a financial reporting perspective, you are absolutely right. They do it on 31st March. But if you see, have you seen Bahi Khata, guys? Bahi Khata, red books. Have you seen the red books? These are for the Bahi Khata. If you see left hand side, these are the red books. Can you see that here? These are the red books. These are the Bahi Khata, everyone. So if you see the small companies, everyone, you see the small companies, they don't have the fancy ERP installed with them. They don't have a very fancy systems with them. They make their books of accounts. Whoever is the accountant with them, whoever is the munim with them, that munim is going to do the entry in that Bahi Khata in typical Hindi. We call it Jama, and the other side you call Jama, and the other side is also called something. So they make entire accounting in Hindi. Jama Gupta. So they make the entire system Jama now. Okay, could be anything. So basically debit, credit, which we understand in English, guys, they make it entire financial statement in Hindi. And they generally close this financial statement, everyone. They generally make this financial statement and on Diwali, everyone. So that's why, everyone, if you see many people, you might have heard about that the financials they close on the Diwali, the financials they are closing on the Diwali, because many people consider the entire balance sheet closure linked with the Lakshmi Puja also. So that's why they close the financials and then they do the Lakshmi Puja also. So these are the reasons people do it at the end of this. So many times you might have seen people who are doing the Lakshmi Puja also, and they are making they are coloring the Bahi Khata also. So these are the practices which is followed, everyone. In India also, what you're saying is correct. 31st March, from a reporting perspective, from my tax perspective, what you're saying is correct. Correct, Kunal. What you're saying is correct. But I'm saying I'm talking about a very small companies, for very small organizations, Kunal, very small retail firms. They informally makes that. Kunal. I'm saying it, not formally. Formally, whoever is their chartered accountant, whoever is their advocate, whoever is doing the filing for those companies, they are still making the same thing, 1st April to 31st March. I'm saying informally, that's how they follow. Point clear, Kunal? Now, P&L statement, everyone. P&L statement, as I discussed, everyone, it is for the month, everyone. It is for 12 months, everyone. So if this is a period from January to December, everyone, if it is a period from January to December, in this period, I'm going to write whatever is my revenue. From this, I'm going to reduce whatever is my expenditure, everyone. And then whatever is my profit and loss, for the year, everyone. Let's say this period is 2023, will come down. If I'm making the balance sheet, everyone, is my balance sheet is also for the full year? Is my balance sheet is also for the full year what I make? No, then why not balance sheet also? But many a times we hear balance sheet is as on date. As on date. What do you mean by? That means for how many days? It is for 1 day. Balance sheet, we make it only for 1 day, everyone. P&L statement, we make it for the 12 months, everyone. Balance sheet, we make it for 1 day. Which day? End of the year. End of the year. Generally, it is 31st of March in India. I'll still call it US perspective. I'll call it 31st of December. So I'll make it, it shows me the position of only the 31st of December. Would that position be the same on 1st of January, guys? Would the situation be same on 1st of January? Would the situation be same on 30th of December? Anything, everything can change because of that, everyone. For example, give me any item of balance sheet, guys. Give me any value of balance sheet, any item of balance sheet. Can I say loan? Loan comes in balance sheet. Bank loan, yeah. Bank loan. Let's say, guys, cash balance will come, fixed assets will come. Let's say fixed asset. Let's say I purchase plant. I purchase a plant and machine. Okay, one is good enough. Good enough. Are we good? Good. Okay. Okay. Hear me out now. Let's say, guys, I have taken any bank loan. Let's say SBI. I have gone to SBI and I have taken this loan. I have taken this loan, let's say, on 5th of January, 2024. If I told you, see, I have taken the loan from SBI. Let's say I have taken 50,000 rupees loan from SBI. I told you that I have taken this loan on 5th of January. Would you assume that on 31st of January, maybe, I would still have the same loan? Would that be the scenario? No. Maybe yes, maybe no, right? But we can't say, when I'm saying 50,000 is the loan, I am telling you my situation on 5th of January. Maybe in few days, I got a lottery and I have enough money. I paid them SBI. Or maybe I have taken more loan also. Maybe another 30,000, everyone. So anything could be there, everyone. When you are seeing any of the position, let's say bank loan, maybe it is the situation for only 1 day, which is end of the year, everyone. Year end. Is this point clear or not, everyone? Yes or maybe? Any question till now, guys? Any question till now? Anything which is not clear? Should I need to repeat that? Guys, feel free to ask any question if you have. Any conversation you want to have it, any discussion you want to have it in this. If you are having a different opinion, please ask me, okay? I'll cover a very basic format, everyone. I'll cover a very basic format, everyone. This will help you out in a lot of things, everyone. This will help you out in financials also, in making the profitability analysis. First is coming sales. From sales, everyone, we are going to reduce COGS. What is COGS? COGS is cost of goods sold. Cost of goods sold. So from COGS, everyone, if I reduce the COGS, I'll get contribution. Is it not contribution? Sales minus gross profit. Sales minus COGS will give us gross profit. I'm confused. What is COGS? What is gross profit? What are we talking about? C. No, it's not variable. I'll talk about that another, but this is not necessarily variable. No. I just did wrong. This is wrong. I just did intentionally wrong. Okay, another here. So what is COGS, guys? What is anyone? Can you explain? Okay, please don't say me cost of goods sold. Anyone, can you explain me what is COGS? Simple words, what is COGS, guys? Anyone? The cost spent for sale of good. Okay. Direct cost. Cost of material that got sold, only the direct cost. Manish, have you done part one? You have not done part one. Cost of manufactured goods. You have done with me, Manish, part one. Operation expense. Now, okay. Producing the sold by a company. No, guys, I'll do with you in part one. This is a general wrong assumption with this that COGS is a direct cost, but which is not this. Means sale per laga cost, operation expense. See, let's say I am making shoes every. I'm running a business, and for businesses making the shoes every. Now there are broadly two buckets every. Cost of making the product without any. Let hear me out, guys. Now hear me out. Now please hear me out. What are the costs involved for making the shoes? First, let's start with the basic cost. What is the basic cost for making the expense? Shoes. What kind of a cost you need? Sole you need for that. Sole is basically the raw material, right? Raw material. Maybe leather shoes if I'm making, so leather. If I'm making the cloths, shoes, so clothes, everyone. Maybe some thread, etc. Some labor who is working. Is that okay? Yes, no? Some other raw material you need for that. Right? Now, after that, if I make this, my shoes, no one will come in my factory and purchase it. I have to do the marketing also, guys. I have to do the marketing. We will hire Virat Kohli for doing the marketing. We will do the advertising in that case. Correct? Again, no one will come into my factory and do it. I have to open a showroom also. We will have a display in the showroom. So all of these are the expenditure. Point clear or not? Yes, no. These kind of a cost everyone. Whenever I'm talking about the cost of making these cost everyone, this is something which is known as COGS. Is this point clear or not? So anything which is more finishing the product, everyone, is known as product cost, everyone, which I'm going to discuss with you when I'm going to discuss with you part one, costing. We call such kind of a cost product cost. So basically, simple point, forget about the product cost. Anything which is related for manufacturing of the product, finalizing the product is called the COGS. Point here. Manufacturing, broadly, you can say that, Ruhi, that whatever the cost I need for finishing my product, Ruhi, is known as COGS. Point here. These kind of a cost, everyone. Which is other than that, everyone, we will call that. What are we going to call that? This bucket. SGN. Selling, general, and administration expenses. So we were here. From this, everyone, if I'm going to reduce, from this, if we are going to reduce SGNA, is SGNA, selling, general, and administration. Sure, Rohit. What I'm saying, Rohit, have you heard this? Two buckets I've classified, Rohit. One is whatever is related with the making of the product. Correct? This is something which is COGS. Ankita, clear? Is that clear? Second bucket, which is not related with the manufacturing. Something which is not related with the manufacturing, I will call that as SGL. Is it okay, Rohit? I'll cover that, Sabha. Hear me out what I'm saying. Ankita, clear? Yes, no? Sabha's question is, if there is a rent of the factory where the goods is manufactured. Let's quickly cover that. Sabha, I'll cover these points. What you're asking is a pertinent point, very relevant point. I'll cover that with you in part 1 when we are going to discuss the costing. But since you asked me the question, I'll quickly cover that. This is a factory, guys. Sabha's question is, this is my factory, and in these factories, I'm making the shoes. Now, factory is, I'm not owning the factory. I have taken this factory on rent, and I'm paying the rent for this. Okay. So this factory rent which I'm paying, guys, is it COGS or SG&A? What do you think, guys? SG&A? COGS? See, understand this first. Hear me. Don't think COGS in a narrow way. Don't think COGS means whatever the material you have is there, whatever is the labor is there, that is COGS. No. COGS, as I discussed, anything which is assisting you in finalizing the product, everyone, is going to be your COGS. If I don't have the factory, would you make the shoes? Where will you make the shoes? You are not going to make the shoes on the road. So is the factory helping you out in making the product or not? Jyoti, is factory helping you out in making the product? Yes, in finalizing the product. Hence, whatever the rent you are paying on that, that can also be classified as COGS. Point clear, Sabha? Again, I'll cover all of it much detailed, all of it much more detailed in the costing. We are drifting towards costing. We'll discuss costing in part 1. I hope it is clear, guys. So SG&A cost, gross profit, COGS will get gross profit, and then I'm going to reduce the SG&A in that case. Broadly after that, I'm going to get, let's say, maybe EBIT here, let's say. Whatever it is. Point clear? Yes, no, maybe. I'm a little confused, guys. Can you help me out with that? Why are we segregating gross profit? Why are we pressing EBIT? Eventually, tell me the profit. Why are we customizing like that? Why are we creating the buckets like that? Why are we creating the layering like this? Tell me the profit, tell me the loss. Why are we doing this? Is the problem clear? Point clear? What I'm saying is, why can't we simply do this? Sales minus COGS plus SG&A, tell me whatever is the total expenditure. This minus this, end of it. Simply tell me the profit and loss. Why are we doing so fancy thing? To know what position, at what stage. Is the point clear? Ruhi, point clear what I'm saying? Ankita, point clear? Why are we doing that? Why are we doing that? Why to waste time? Why to increase your burden, guys? Eventually, as a finance professional, you're supposed to do it. Why to increase your burden? Tax it paid is not. Let's try to do one question here, guys. Let's do one question here. Maybe that will answer your point. There are two companies, Abhinav. There are two companies. Let's see, Ankita. Let's try one question. Where the sales is $100. $100. Which is a better company? A is a better company. Sabha, why? Because I have written with the name A. Why A is a better company? Oh, why? A is a better company because I have written it first. Then why is a company? Oh, both are same. Little. Same company. Why they are profits? Yeah, good point, Jyoti. Can't say yet. So both are equal. Point clear? No one is good or bad. No one is good or bad. Point clear? Ishika, Karthik, Sabha, Kunal. Both are equal. Nothing can't say here. Right? From this, I'm going to review COGS, which is 20, 60, What will come after COGS? It will come gross profit. Then it is going to be 80, 40. Then I'm going to reduce SG&A, selling, general and administration, which is 60, 20, which is 20, 20, which is my EBIT. Look at the EBIT. Okay, forget about that. Now this is the total which is given. Now this is what you are having, 20 here, 20. If I ask you which is a better company now, A equal A. A. Why is A is a better company? People were saying why B is a better company, guys. Who's saying it? I think they are equal. What are you saying? Yeah, Ruhi, but 2020. Why B is a better company, Karthik? Less spend on the marketing, advertising. If I look just the EBIT, guys, okay, hear me out. I heard you guys, please hear me out now. If I tell you just at the EBIT level, if I just look at the EBIT level, everyone. Okay, hear me out, guys. Please stop typing, listen to me. If I look just the EBIT, which is a better company, by looking at EBIT only, which is a better company? No better, equal. If I look both of them, they are equal. No comparison. Both are same. Point clear or not? Point is, everyone, point is, if I look the gross profit, everyone, gross profit by which is the better company, A or B? Correct. I hope there are no controversy here. If I look the gross profit, it is a better company. See, in this scenario, when almost everything is equal, I think A is a better company. I think A is a better company. Why is that? See, the point is, guys, who is making the product cheaper? That means who is making the product at less value? You are making A, you are making it $20 only. And here you can make more gross profit, everyone. Since you are having more gross profit, everyone, you can do more marketing, guys. You can do more advertising, guys. The more advertising you are going to do, guys, the more advertising you are going to do, the more brand you are going to create for your company, for your product. The better brand means better sales in the future. Point clear or not, guys? If I see, let's say iPhone has created that kind of a niche for itself that even if they're selling the iPhone at 1.5 lakhs, outside iPhone store, there's such a long queue. Do you see the such kind of a queue outside any Vivo phone or outside any Oppo phone? Have you seen that? No, no way. Because even if they're selling at 50,000 rupees or 20,000 rupees, still people who are buying 1.5 lakh iPhone, they are so much waiting for that because that's a brand consciousness what they have done by creating the brand around it. Point clear or not, everyone? If you have seen Shark Tank, guys, if you see the Shark Tank from India, so in Shark Tank, guys, many a times if you see, Vinita keeps on asking that how much gross profit you are having, how much gross profit you are having in that case before asking the maybe net profit in that case, maybe EBITDA in that case. Why? Because the bigger the gross profit you are having, guys, the more marketing you can do it. Here, this guy, company B. Can company B spend $60 like this company on the marketing? No. Then you will start having the losses here, everyone. So obviously, everyone, the same reason, everyone, she asked you this, because the more gross profit you are having, then you can spend the money on the marketing. The more money you are going to spend on the marketing, gradually your brand will start going up. The more brand value will go up. the more sales will pick up everyone. So it's a complete circle, everyone. Point clear, guys? For example, if I say, let's say, if you go and purchase any thumbs up, Pepsi, Coke, how much each Coke bottle cost you guys? Coca-Cola bottle. I think 15 rupees or something. Yeah. So sales is, let's say they are selling any 15 rupees bottle. What is the cost of making each 15 rupees bottle? 1 rupee. In fact, many times less than that. So how much gross profit they are having? They are having a gross profit of 14 rupees, guys. 14 rupees. See, they're having such a huge gross margin, everyone, gross profit they are having. That's why they can hire any celebrities in that case. And even if they are hiring any celebrities, after that, still they are making the profits. Because this is very high. Is this point clear or not, guys? Yes, no, maybe. So whenever the numbers are equal, everyone, here it looks like that it is a better company. Again, I'm comparing two companies. Company A, company B. Sales, 100, 100. COGS, 20, 40, 80, 60. Gross. Then I'm reducing SGL. 20 average. 10. This is coming. Which is a better company? A, B, A. That's exactly I want to address this, guys. Now you're thinking, no. Now you're thinking, now you're not looking at this. See, now you're not ignoring EBIT. Now you're ignoring EBIT. Earlier you were ignoring gross profit. Now you're ignoring EBIT. Agreed. I know why are you saying A in that case, because you are having the higher gross margin in that case. Agree. And that's why you can put more money, everyone. But still you are not able to generate that much. This company, maybe their product is costing higher than they can't do that much marketing also, but their profits are higher. There are many companies, everyone, where the quality speaks for themselves. They don't need to do too much of a branding also. There are many products, everyone. Have you seen the ad of WhatsApp? Have you seen the ad of WhatsApp? Any celebrities? Have you seen any celebrities endorsing the WhatsApp? No. Because the product is so good. Product is so good that obviously it will travel the word of mouth. Point clear what I'm saying, guys? Sure, Ruhi. So, Ruhi, what I'm saying is, just because automatically gross profit is higher does not mean it is a good company. Point clear? You have to see the other angle to that also, Ruhi, in that case. In this case, maybe you are spending lesser money on the SGL. And that's why you are having the higher profits. Point clear? But maybe, Ruhi, in this case, your product is like that, where you don't need to do your marketing in that case, right? You are not doing the marketing because you are spending a good amount of money on making the product. That's why you don't need to do the marketing, because your product is speaking automatically for yourself. Then why would you spend the money? For example, Ruhi, I gave you the example of WhatsApp. For example, Airtel's founder, Sunil Mittal's son, has created a company called Hike Messenger. Have you heard about Hike Messenger? They used to be, now also they are not very active. Hike Messenger. So he has created, Sunil Bharti Mittal's son, who has created this app. And WhatsApp. Both are messengers. You have never seen any ad for the WhatsApp Messenger. But later on, Hike has started giving the ads. Because they have to market that, no matter what the product is, because no one are picking their product on the word of mouth, but never seen the ad of WhatsApp. Because not required. The product is speaking for themselves. Point clear, Ruhi, what I'm saying? So my point is, what is the conclusion for this now? The question is, what is the conclusion for it? Which is a better company? By looking at this, generally on the face of it, it looks like a B is a better company. B is a better company, obviously, because you are making more profit. Because you are making more profit. But obviously, you have to look at the other angles also, which I discussed, which is the higher gross profit and the advertising cost. Maybe product which A is making is very cheap, Chinese, bad quality. That's why people are not purchasing. And that's why you have to do more marketing. So on the face of it, B is a good company, everyone, but you have to look at the other aspects also. Point clear what I'm saying, guys? Very clear, guys, clear? Any question? Clear? Please let me know, guys, if you have any question. Please ask me. Harsh, clear? Jayanti? So, correct, Ruhi. So, Ruhi's question is, I'll repeat it for everyone's benefit. Ruhi, when the sales are equal, when the EBIT is equal, that means both the top is also same, Ruhi, bottom is also same. Now I have to see what are the other elements which are making them different. That's why we were choosing the gross profit. Clear? So sales minus gross profit, sales minus COGS, I'll get the gross profit. From this, what we get EBITDA. EBITDA is earnings before interest, tax, depreciation, and amortization. Then we are having depreciation and amortization. We are having EBIT, which is earnings for interest and tax. From this, we are going to reduce interest. This is, what do we get after this? PBT or EBT, same thing, profit before taxes. And from this, I'm going to reduce taxes. We will arrive at PAT. Profit after. It's just the name, guys. Copy the format. I'll discuss about this. No problem. Done, guys. Should I move? Okay. That's it. A, B. Sales. Sales 1,000. This is 100,000. COGS 300. Gross profit 700. Reduced by SGM 200. This is what I get the operating profits. EBIT or operating profits, which is 500. 15. If I ask you which is a better company, please tell me why A, why B. Why A, why B. Justin, but which is a better company? A. Anyone for B, people who are giving the B as the answer, part. Question B, why B? Because the dollar wise, it's a common point, everyone. Why 50%? I don't understand. It is just having 500. It is having 15,000. Why 15,000 should be a good thing? No. Here I'm having 500 just the profit. Here we are having 15,000 as the profit. Yes, no. No. Reason being, guys, we have to see here. We have to see here, everyone, percentage wise. How much percentage gross profit you are having? How do you calculate the percentage gross profit, everyone? 700 divided by 1,000, 70%. Point clear, guys? Yes, no? Yes, no, guys? How much is this? 500 divided by 1,000. That means 50%. Is that okay? So, and here what do we have? Here we'll do 30,000 divided by 30,000 divided by 100,000. So it is 30%. This is 15,000 divided by this. So it is 50%. I hope the point is clear. So basically, everyone, what are you doing? You are you are converting the dollar values into what? Converting the dollar values into what? Into percentage. Correct? This is what is known as, everyone, common size income statement. Someone has told me, this is the person who has told me, that sales are not same. Agreed. They are not same. They are not comparable. I have just opened my new company which is making the shoes. Can I compare myself with Nike? I cannot compare myself. I cannot. But percentage, the moment I convert myself percentage, everyone, then they are comparable. If I convert them into percentage, everyone, then it is comparable. Point clear what I'm saying? For example, it's a common sense. It's a very simple point, everyone. For example, if I'm saying there are two students, everyone, A and B. A and B. If I tell you their maths score, everyone. If I tell you their maths score, let's say A got 49. B got 45. Who got a better score? Who got a better score? Part. A got 49 in maths, B got 45 in maths. Obviously, it looks like A, but if I tell you total marks, that means out of 100 A got this, out of 50 B got this. Now who's got the better marks? Come on, 49 is better. What are you saying? 49 is better. No, I can't do that. I have to, this is 49% and this is what, 90%. So obviously B is better. Point clear what I'm saying? Same here, everyone. Don't compare the dollar values, everyone. It's just not comparable. It's just not comparable, everyone. That's why we have to convert them into percentage, everyone. Point clear? That's why it is known as common size income statement. That means what we are doing it, we are converting the entire income statement in a common size where now I can compare. Now I can compare and A and B. We are making them as common size and we are converting them into dollar or percentage. Point clear, guys? This is also known as, everyone, this is also something which is known as vertical income statement. Vertical income statement. Okay, help me out, please, guys. A, B, C, which is vertical? A, B, C, which is vertical? A is vertical. This is vertical. Obviously, this is vertical. Right? So what we are doing here, everyone, what we are doing here, this is the income statement which is given. This is the income statement for A. This is the income statement for B. Entire income statement, everyone, we are converting into percentage, everyone. How to do it? We will keep sales as the base. Sales, we will keep it as the base. And then we are converting everything into percentage. So how much how you have done 70%? 700 divided by 1000. Point clear, guys? Same, everyone. 500 divided by 1000, everyone. 50%, everyone. How about COGS percentage, guys? How about COGS percentage? 300 divided by 1000, 30%. How about 200? 200 divided by 1000, 20%. This is 100 divided 1000 divided by 1000, 1000. Sorry, 100%. Is this point clear or not? See, what are we doing? We are converting everything into percentage vertically, everyone. Vertically, everyone. That's why it is called the vertical income statement, everyone. I hope the point is clear. That's why vertical income statement and the common size income statement. So that now it is comparable, everyone. Now it is something which is comparable. That's the reason. That's the one of the advantage, everyone. That's the one of the advantage of the vertical statement, everyone. That's one of the advantage that I can compare the different size company, different sizes of companies I can compare. For example, my new shop, my new factory for shoes versus Nike. If I convert into percentage, now I can compare. This is something which is known as inter-company comparison. Point clear, guys? So the company with a different size. So the company with a different size, I can compare it now. Different sector would not be correct, Kunal. Why would you compare Nike with the Tesla? That's wrong. Why would you do that? That's wrong. Don't think. Should I move? Second, everyone. Second advantage, everyone. For example, if I tell you the various financials, let's say this is 2024. If let's say sales, I have converted everything into percentage, everyone. So here 100%, everyone. Here COGS is 60%. And then gross profit is 40%. And here my SG&A is coming 20%. And then we are having EBITDA. So maybe everyone, 40, next year I've converted, it is coming 45%. Next year I've converted, it is coming 48%. Next year I've converted 50%. Point clear? So what is happening? Your gross profit is increasing or decreasing? Your gross profit is increasing, everyone. Because maybe your COGS, everyone here, maybe your COGS is actually going down. Obviously, everyone, how my profit will increase? Obviously, when my cost is going down here, my profits are increasing, everyone. Point clear what I'm saying? So with this, another advantage is when I convert everything into the percentage, I can compare my performance period on period, my performance on a period on period, everyone, which is known as time series, everyone. Time series. Time series. It's a very simple form. First, I told you that you can compare the different sizes of the company, which is known as intercompany. That means you can check your performance with the Sharma ji ka beta or beti. That is, you are checking your performance with someone else. Point clear or not? Second is the time series. You are saying that I scored this much in the 6th, this much in the 8th, this much in the 10th. So you are checking your performance on the period wise, everyone. That is time series, everyone. Difference clear or not, guys? Difference in the first and second is clear, guys. Anyone? Parthe clear? So something, guys, you were asking me, can I compare the TCS performance with the Tata Steel? I cannot. One is in the automobile, everyone. One is into the automobile car company. This is steel company. Though both are Tata Group. Both are Tata Group, everyone. But still I can't compare. It's just not comparable, everyone. I hope the point is clear. Yes, no, maybe. Really. Not clear, Ananda? Clear? Let's say sales is $1,000. COGS is $300. Gross profit is $700. SG&A is $200. I have a question. How much is the SG&A percentage? Try everyone. $20%. Easy. Easy. Very easy. So if I convert that into percentage, everyone, this is 100%, 30%, 70%, 20%, 50%. I hope it is okay. So for every item, what are you keeping as the base? For every item, what are you keeping as the base? You're keeping base. That means denominator, everyone. You're keeping denominator as the sales. Okay. This is vertical income statement. Now here, everyone, it's not mandatory you have to follow this one. What I can do, within that also, I can follow something else also. I'll explain you what I mean by SG&A. Is SG&A the one expenditure? No. SG&A is the compilation of various expenditure, everyone. Maybe I'm paying the salary to my staff, everyone. Staff salary is approximately, let's say, $50. Rent I'm paying for my showroom, everyone, which is approximately 30. Let's say I'm paying some commission also. That commission which I'm paying is 40. Any kind of a freight out I'm paying, which is approximately 45. Any kind of electricity which I'm paying, that is going to be 35. Point clear or not? So it is 200. Is it coming 200 total? Check quickly. So 50, 80, 140, 140, 65, 200. Correct. So this is the breakup of 200. Point clear or not, guys? Yes, no, maybe. Now, if I convert this into percentage also, if I convert that into percentage, guys, how much percentage will come? 50 divided by 1000. What is the value? No, it's not 25%. 50 divided by 1000. 5%. So the values are going to be very small. Yes, Vinod? Not clear? If I'm saying convert into as a percentage of sales, what we have done till now, Vinod. Okay. So if I convert again with the sales, everyone, it would be 5%, 3%. See, the percentage wise value are going to be very, very minuscule. Point clear what I'm saying, guys? Yes, no? Not clear? So what we can do here, everyone, another approach, what we can do here, everyone, rather than keeping the percentage as the sales, anything which is subcategory, anything which is a subcategory, everyone, I can use a different denominator. I can use this as the total SG&A, everyone. What do I mean by that? What I can do here, everyone, would be 50 divided by total 200. Now, how much percentage would that be? 25%. This is going to be 30 divided by 200. This is 40 divided by 200. This is 45 divided by 200. And that is 35 divided by. So how much is this going to be? It's 15%, 20%, 22.5%, and 17%. Point clear what I'm saying, guys? So the percentage value was coming very small. Now I can say, oh, which is the maximum expenditure, where the maximum expenditure is happening. In the salary, you are paying the maximum expenditure, guys. Salary is number one. Then we are paying a lot of money in the freight also, everyone. So why this, everyone? When the percentage is higher, you can understand things much better. Point clear or not, guys? Yes, no, maybe. Another thing, guys, what you have done it here, everyone, what you have done it here, whatever is my total SG&A, how much is my total SG&A? Total SG&A is 200. So what I have done here, everyone, entire SG&A, I have made it a pizza out of it. I made it a pizza, I made a pie out of it. Which point hurts? All over again, everything again. Which point? Have you heard this conversation that why are we making the percentage? What are you sleeping, Harsh, to finish this to me? You should ask me then and there. I've asked you this first thing. Have you heard why are we making it percentage of 200? Have you heard this? Harsh? Yes, no? Okay, let me finish this for everyone. I'll ask people to read it, then I'll come back to you. So what you have done, guys, when we are talking about SG&A, which is 200, by this, what are we doing? We have converted the entire SG&A of 200 as a pie. Point clear or not? Now we are cutting the pie. 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 Maybe we are saying some portion here. Maybe we are saying some portion here. Maybe we are saying some portion here. So what we are saying, everyone, correct? We are saying salary is going to be 25%. Maybe this is salary, everyone. So what you're doing, everyone, with this, it's much easier for you. You know that this is the pie. Maximum pie is coming from salary, everything. Maximum expenditure is going there. I hope the point is clear, guys. Any question? Quickly read it from the book. By the time I discuss with the for the family. Have you guys got the book? Have everyone got the book? Anyone who is not having the book? Okay. I'll you guys quickly read this by the time. In this, quickly read and tell me which is a better company. Big is a better company or local is a better company? Tell me. Local is a better company. Correct, because you'll convert that into percentage, everyone. And here it is coming 15%, here it is coming 5%. So obviously this is a better. Quickly read this entire illustration, quickly read and confirm, guys. People who do not have the book, please read it from here. Okay, this conversation is only for the Harsh. Rest of the people who have understood, please read this question. Harsh, have you understood the vertical income statement, what we have done? Have you understood vertical income statement? So what is the denominator you were taking in the vertical income statement? What is the base of the denominator you are taking? Harsh? Sales. What I'm saying, everywhere you will take the sales in the vertical income statement. But if any expenditure is having the vertical breakup, for example, SG&A is having the breakup of multiple expenditure. Point clear up till here. 200 is the total. 200 is the total. Out of that, we are having many expenditure, SG&A, rent, breakup I have discussed with you. Clear? So what I can do is, for that particular breakup, rather than taking as the sales as the breakup, for example, I share you that percentage also, the percentage goes very, very down in that case, 2%, 3%, right? Or it could be very, very small also, 0.01% also. It can be possible, everyone. So in this case, Harsh, rather than taking percentage of the sales, everyone, I might take it the percentage of the total SG&A, everyone. Point clear, Harsh? The way I have done it, 50 divided by 200, 30 divided by 200 in that case, so that my percentage will look higher in this case, Harsh. And obviously my analysis can be much better. As I further discuss, Harsh, when I do this approach that I make the expenditure divided by the SG&A, with that, Harsh, I'm converting the entire expenditure into a pie. And I'm saying, now boss, this is the pie, this is your pizza. Each piece is how much percentage. That means out of the entire pizza, out of the entire pie, how much is salary, how much is rent, how much is commission, how much is freight in that case. You get the better analysis with it. For example, guys, if I say, can you see here, guys? If you see here, multiple breakups are there. You see here, is it visible, guys? Here, so many, this person, see small, so many percentage are coming. It's 1%, 1%, 2%, 2%, 2%. So many small breakups are there, which is difficult for you to read it. On the contrary, if we are having a pie chart like this rent, food, etc. This is so small, easy for me to understand. Okay, this much is this, this much is there. So it's much easier for you to, when you're doing this, it is much easier for you to do this, that I know this is a bigger chunk. I can do analysis much better. On the contrary, if the breakup is too small, analysis will not be too big, too reasonable in that case. Point clear what I'm saying? That's why we do. Quickly read, confirm. As you're done with the example, right? Done. Guys, please read. Please read. If you have any question, you can ask me now. Demo. Okay. I have a question, guys. If I compare two companies, guys. Company A, which is a large company, let's say Nike. Second company, which is a very big company, which is a very small company. Let's say I've just started the company. 10 days before, and I've started this company with, let's say, 5 lakh rupees only. Premise clear? Both the scenario clear? Yes, no, maybe. Can you tell me where COGS as a percentage wise, would be higher? Company A, or forget company A, let's say Nike. Let's call it Nike. Nike versus B, where COGS is going to be higher as a percentage. Nike, hear me out. Nike, B company, or it could be either. Forget about either. Then everyone would say either B. Automatic answer. Nike or B, and why? Nike or B, why? Which company? Nike or the B company? Large company or the small company, where COGS percentage wise is going to be higher, and why? Nike, why? Tell me why. Also, people who are saying B, people who are saying Nike, why? For brand, what is your answer, Ankita? Nike or B? No. What is your answer? Nike or B? So, Harsh, you are saying Nike? Jasmine. You are saying, Jasmine, lower COGS. We are not saying lower COGS. If I look the dollar values wise, please understand. If I look the dollar value wise, guys, obviously Nike is going to be way too high. They are into billions of dollars every month. I have with 5 lakhs rupees, how much sales will I have? How much cost will I have? I'll have a sale of 2-3 lakhs rupees, that too. They are having billions of dollars. So obviously, everyone, if I'm talking about the value terms, Nike would be much higher. Point clear or not? But I'm not talking about percent. I'm not talking about dollar wise. I'm talking about percentage wise. Percentage Nike would be much lower every month. Nike would be much lower than us in that case. That means COGS of B company is going to be higher because of Nike vis-a-vis the Nike. Why is that so? Harsh, point clear. Dollar value is different, percentage is different. Dollar value wise, Nike is going to be lower because tomorrow, let's say you are the shoe supplier. You are the cloth supplier. That means how we are making the shoes. From Nike is also purchasing from you, and I'm purchasing from you. Nike is saying that we want 10 lakh meter of clothes, meter of cloth for making the shoes. I need only 5,000 meter of cloth. To whom you will give the discount? To me or Nike? Where will you give the discount? Obviously to Nike. They are purchasing from you from 10 lakh meters. So obviously you are going to give much more discount in that case. Typically, this is what we know as economies of scale also, because I have scaled my operation so much, everyone, that I'm getting the benefit of that scale. Again, the kind of technologies they are having, guys, the kind of labor, expert labor they are having, I don't have it. Because of that, everyone, they are having the cost advantage, everyone. Point clear, guys? Correct. That's also correct. They have such a big team who are going to manage their cost also. Agree. Should I move? Harsh, clear? Let's quickly read this vertical income statement. I have already done everything. Common size income statement, which is the income item divided by sales. I have done the exception of that also. Quickly read piece number 3 and confirm. Anyone, any question, please? Perfect. Any question till now? Harsh, is it clear? Have you read? Oh, great. Let's move. Now, what you have done till now, you have done vertical income statement. Vertical income statement. Here, what do you do? In the vertical income statement, what you do? That whenever you are calculating, whatever the item you are calculating, we always divide that in the denominator. What do you keep in the denominator, guys? You keep sales in the denominator. Sales in the denominator. But when I talk about, now we will discuss the vertical balance sheet. In this case, everyone, what we are going to do it, each balance sheet item, everyone, and in the denominator, everyone, we will take total assets everyone. For example, I'll try to do one question with you. The balance sheet, so if I'm saying plant and machinery, furniture and fixtures, cash, accounts, receivables, all of it. So this is going to be, let's say, 100, 200, 150, let's say 500. This is equity share capital, preference share capital, loan. This one, 500. Now, whether I say total assets, everyone, or whether the total liability, same thing, I'll take the 500. So how much is this going to be? This is going to be 100 divided by 500. This is what percentage? 20%, right? 2%. 20%. Then it is 100 divided by 500. 200 divided by. Here I'm doing 100 divided by 500, which is 20%. This is 200 divided by 500. Yes, 40%. This is again 200. Is that okay, people? Again, the same thing, guys. Again, the same thing, that it will help me in getting to know. So if I see asset wise, I'm having almost 20% of the plant and machinery, 40% of the furniture and fixtures, and 30% is I'm having the cash in that. So you get to know the overall position. Same reason, same thing, whatever we have done it, whatever the benefits we have done it, everyone. I can compare myself with the other companies. I can check my overall position, or I can choose my overall position, everyone, which is time series. That means you can compare yourself with the Sharma Ji Ke Bachche. You can also compare yourself with your past performance also. Same advantages. Point clear, guys? Again, the way we have done it, everyone. Again, the way we have done it, everyone. That I can make common here. I'm saying here. What I can do here is, this is individually we have done it. This is what we have done it. What we have done it here. And machinery is coming 20, 40, 30, 10. 20, 40, 30, 10. Right? So what I can do here, everyone, I can see that how much plant and machinery in a company. There is not only one plant and machinery. You will have a variety of it. Maybe at a different location, you are having the plant and machinery, everyone. So maybe everyone in south, we are having few machine plant. In north, we are having some. In east, we are having. In west, we are having. So maybe everyone here, we are having 20. Here we are having 40. Here we are having 30. How much? 10. So now I can, rather than doing the total wise, I can do it with this 100 only. So I can do 20 divided by 100. That means 20%. This I can do 40 divided by 100. So I will do the breakup of this. I use the breakup of plant and machinery, everyone. I'll simply do the breakup of that, everyone. Few plant and machinery I am having in South India. Second, we are having few in North India. Few we are having in East India, and some we are having in West India, everyone. So this is maybe 40%, everyone. This is something maybe 30 divided by 100. So 30%. And then 30 divided by 100. So that means 10%. So 30%. 10%. Is this clear what I'm saying, guys? the way we have done the SGNA breakup, similarly, I can do the breakup like this also. Quickly read this book. Then I'm going to we have done it. So here everyone, total asset, balance sheet divided by total asset divided by total liability. Same thing, does not matter. Page number 4 and this. Read just up till here and confirm. Page 4 and 5. People who do not have the book, please read it. Okay. I hope it is okay. Should I move? Let's do one question, guys, together. I am on page number 5. Let's read this. There is a company which is having the management has set the target for the. So these are the targets. The specific balance sheet. Target of this as a percentage of the total. So they have set up the target. Okay, guys. That cash we will keep 5% of the total asset. Property we will keep 50% of the total asset. Current liabilities we will keep 10% of the total assets. Point clear or not? Is the point clear? This line is clear or not, guys? Company thought that during the end of the year, this much percentage of the sales, percentage of the assets would be cash, percentage of the cost would be this, and percentage would be current liabilities. Point clear? Out clear? Now, this is your current year. That means this is what your actual position is, guys. This is your actual. How much cash as a percentage you are having right now? Tell me. Don't look into the answer, guys. Sure way, no problem. Calculate. Which is 50,000 divided by 410,000, guys. Where I've done this. Different accounts can be used as the base in order to make the comparison. Yes, I want to know about the fixed assets. For fixed asset, what are we using? Total asset, right? So let's say I'm doing for Tata Steel. I've done this. And same everyone, we have done fixed asset divided by fixed asset divided by total asset for Jindal Steel. Now, in this case, Rohit, what I'm saying is that I'm doing the breakup here for fixed asset, that how much in the north, how much in the south, how much in the east. Point here, Rohit. Same, I can change that here also. Yeah. Okay. You're right. Cash percentage is coming 12.19. So I'm using it actual here, guys. Actual is. I'm taking round of figure. So I'm taking round of figure of 12%. Point clear, guys? Okay. How about plant and property percentage? 29.27. So I'm taking the 29%. This is 29%. Point clear? Current liability, how much percentage of current liability? $160,000 divided by 4. Approximately 31%. Point clear, guys, what I'm saying? This is budget. This is that. Now forget everything. Forget calculation, everything. Let's see the analysis, guys. Please, let's see the analysis. Your target was, guys, your target was that cash, I'll keep it only 5%. But actual cash is 12%. What is higher? Target is higher, actual is higher. Actual is higher, target is higher. Actual is higher. Correct. Now, plant and machinery, we thought we'll have 50%, but we are having only 29%. So actual is lower here. Current liabilities, everyone, we thought is going to be 10%, but actually it is 39%. Actually, it is higher. Up till here, any question, concern, point? Okay. Looking at this situation, I want to go back to target. I want to achieve my targets, everyone. What should I do? Any solution without looking into the book, guys? Think, what should I do so that I can fix the target? I can achieve the target. In PP&E, Sabah's point is that whatever the cash you are having, with that, I can purchase PP&E. What will happen with this? What will happen with this? Agreed, cash will go down, PP&E will go up. But what will happen, Sabah, with the current liabilities? How reduce it? How? Bharat. We are talking about solution. How? Sabah, your point is correct. We will purchase the cash. We will take the cash and we will purchase it. But what about current liabilities? You will take loan. You will take loan for purchasing for paying the liabilities, Ankita? Correct. Many approaches can be there, guys. We can do that also. Many approaches, many solutions are okay, guys, here. There is no one solution in that way. First, what you're saying is also correct. That I'm going to purchase asset by paying the cash. What will happen with this? This is first approach. This will go up, this will go down. Point clear, guys? Second, everyone, what could be the scenario? Second scenario is that whatever the current liabilities I'm having, I'm going to pay with the cash. So this will go down. This will go down. Point clear, guys? Third is the mixed approach. Third is the mixed approach, everyone. Third is the mixed approach. What is the third is the mixed approach? What you're saying? That means whatever is the PP&E I'm having, for that maybe I will take the loan. And this loan obviously is going to be long term. Correct? And whatever is the cash, I will pay the current liabilities. So it's a merger of both the methods and scenarios. Point clear or not, guys? Anyone, any doubt, please let me know. Clear? Quickly read the analysis. It's a simple one, everyone. Read this, page number 6. This. Rest you have already done it. Page number 6, read and confirm. So Abhinav, have you read this? Read this, same thing, what we are discussing is there. Done, guys? Clear? Not clear? Great. I think we can stop for a break. First class, I will not make it very happy for you. Keep it very simple, light. We can stop for a break. I'm going to see you guys at 9:20. We'll start. Thank you. Hi guys, have you joined? Should I start? Yes, no, maybe. Tell me one thing, guys. If in the year 2023, and if I say 2024, if let's say my sales here in 2023 is $100, now if it has become 120%, how much is the percentage growth? Easy, 20%. Very easy, 20%. How have you arrived this? Can you help me out? What is the formula have you used? Anyone? Difference minus previous year. Shan says. Guys, any other answer? 20 divided by this. 120 divided by 100 is coming 1.2 part, not 20%. Correct. So basically, there are two ways I can calculate which is something which is known as annual growth rate. How do you calculate that? You calculate whatever is your new value minus old value divided by old value multiplied by 100. Is that okay? How much is the new value? Come on, let's do it quickly. What is the new value, guys? 120 minus 100 divided by 100. So how much is this value coming? 0.2. 0.2 into 100. How much is the value? 20%. Is this okay or not? Any doubt? This is one approach, everyone. This is one of the approaches. Another approach, everyone. What I can do here is this. I will calculate here, everyone, whatever is the new value divided by the old value minus 1 into 100. That will also tell you this. For example, what is your new value? 120. Divided by 100 is the old value minus 1. How much is that? 1.2 minus 1 into 100. How much is the answer? What is the answer? Yes, no? What is the answer? 20%, same way. So you can follow the first approach or second approach. Answer is still the same. I hope it is okay, guys. Yes, no, maybe. Quickly try one question. Quickly try one question. 2020. Sales everyone. Here is 1300. That's not a bad. Is 130, 180, and 210. From here to here, what is the percentage increase? Try. %38%. So which is new value divided by old value. New value divided by old value minus 1 into 100. So that means 180 divided by 130 minus 1 into 100. So that's how you're getting 38%. How about this if I go from here to here? Again, same thing. New value divided by old value. Then 16.67%. So approximately 16.67%. Is this point clear or not? Any doubt here, guys? Here, let's read it from the book. I'm here, guys. I'm here on page number 8. Everyone, quickly read this. Page number 8. Read and confirm. Run, guys. Okay. Read this example, same what we have done it, everyone. Same example what we have done. 1300 to this to this, everyone. Same answer we have discussed, everyone. It is 38.67%. Rest, same approach. And the way we have calculated this, same way you can calculate the others also. Point clear, right? What I'm saying? So from here to here, 38. From here to here, this. Same, everyone. Here to here, 36. Here to here, same. Any question here till now? Yes, no, maybe. No, should I move, guys? Which analysis we have done, guys? Sorry, I missed that. What is the other name of the common size income statement? Very good. That is known as vertical. There's one more analysis which is known as, any guess? Horizontal. Horizontal. See, vertical we have done. I'll talk about the horizontal. See, vertical, what you have done. You said, this is my sales. That's my COGS. That's going to be my gross profit. Then this is SG&A. And that's how you were calculating this. Correct? That's why we call it vertical. Now, in horizontal, everyone, I'll compare 2020 with 2021, 2022, 2023. I will compare like this, everyone. That's why it is known as horizontal. Is this point clear or not, everyone? Yes, no, maybe. So if I say, everyone, here, if let's say in the year 2020, 2021, it was 100 and it has become 130. So how much percentage is there? Percentage increase is 30%. Percentage increase is 30%. Point clear or not? But how much overall it has increased? It has overall increased by 130%. Point clear or not? 130% it has increased. The difference between them is 30%. Short part. So first is how much it has increased. It has increased. How much is the difference between them? For example, part, if I'm saying right now you are having a sales of 100, right? And do the 130% of that. What is the value coming? If I cancel this, what is the value coming? Part, what is the value coming? I'll do it one more time. 2020, I'll do it one more time, no problem. And 2021. If I tell you this is $100, and here this $100 has increased, the $100 has become 130% of 100. That means I will do the 130% here. So how much is that? 100 into 130 divided by 100. This will cancel, this will cancel, this will become 130. So 100 has become 130. So how much is that? 100 has become 130%. Point clear or not? But if I ask you what is the difference in them, how much is the increase in them? Increase we calculate the same way, 30 divided by 100. Is this point clear or not, guys? So everyone, what is the horizontal formula for horizontal? The formula for the horizontal is going to be new value divided by the base value multiplied by 100. That's it. Let's try one question here that you will understand. 2020, 2021. This is 100. This is 160%. Sabab, first let's do what we are doing it. If you keep reading the book and not focusing it, in that case, what we are doing it. Once we are going to do it, then read there. Or stop me when I'm giving the time in that case. What we are doing it, see that. Otherwise, you will miss what we are doing here. Okay. How much percentage is becoming this? %160. It is becoming horizontal. If I'm doing the horizontal analysis, what is that? 60% or 160%? Sabha, 60%, 160%. Horizontal analysis is new value divided by old value. 160 divided by 100 into 100. So what is the answer? Is 160%. Point clear or not? Everyone, point clear or not? Sabha, clear or not? Now, next year, everyone, next year it is becoming, let's say, 180%. When I say horizontal analysis, in horizontal analysis, we take as the base value. Base value could be anything. Let's say here I am taking 2020 as the base. So while I'll compare this with this. I'll compare this with this. Point clear or not? So how much is the percentage increase? Here is the percentage horizontal. When I say it is 160%. How much is this? Same way, new value divided by base value minus 1 minus multiplied by 100. It is 180%. Point clear or no? Yes, no, maybe. I hope it is okay. But is it the same for the annual increase? Annual increase is not this. I'm just copying this one more time. Jasmine, not clear? Now, in annual increase, what do I say? What do I do in annual increase? Same. New value divided by old value minus 1 into 100. So how much is the percentage increase? Sabha, how much is the percentage increase here in 2021? New value is 160 divided by old value minus 1 into 100. It is 60% increase. Point clear or not, guys? How about the percentage increase here? Same way. New value divided by old value minus 1, 100. What is the new value? 180. What is the old value? 100. No, don't do that mistake. When I'm saying year on year, I will keep moving from here to here, here to here, here to here. I'll keep moving. But in the horizontal, I am taking this as the base. Difference clear or not, guys? Sabha, does that answer your point? Simple. Minus 1 to 100. This is 1, sorry, not 100. 180 divided by 160. What is the value coming? Divided by 160. But it's 12.5%. Is this okay or not, people? Everyone, is that clear how I'm getting this? Sabhi are clear? Yes, no, maybe. Let's read it. This is horizontal analysis. Quickly read this. I think simple. Guys, please read. Whenever I'm giving you time, please read. So that you are not facing problem when you're reading on your own later. Confirm, Mansura. Done. Horizontal analysis, everyone. I have already done. Horizontal analysis, we have already done, everyone. So can you please do it without looking into the answer, guys? From 1300, everyone, if it is becoming 1800, how much is the horizontal percentage? How do you do it? 1800 divided by 1300 into 100. How? 50%. No, sir. You're telling me the annual increase. I'm not talking about annual increase. You're getting confused. I'm talking about horizontal analysis, which is 180, 38%. Point clear? Now, if I'm calculating horizontal for this, what is the answer? Guys, what is the formula, Kunal? Formula is new value divided by base value, Kunal. You are taking 1800, Kunal. No. I will take year one as the base, from here to here and from here to here. Right? Part, listen what I'm doing here. So that's why 2100 divided by 1300, I'm going to take it in the horizontal. That's why it is coming approximately 161.5%. This is horizontal I'm doing it. From this period to this period, from this period to this period. See, 138, 160. There is a difference between the horizontal and year on year. Guys, not clear? Point clear? Sabha clear? Kunal? So if I just quickly summarize everyone, just quickly summarize for you guys. If I'm taking 3 years, 2020, 2021, 2020. Okay. Sales. I'm not taking $100, otherwise you guys, it's easy for you. 110, 130. Yeah, which you can say same 160. Please tell me 2021 horizontal, please. Everyone, please try. We'll do this last question and then we'll. For 2021, it is going to be 130 divided by 110 into 100. I'm taking the round of figure there. 180. Now here everyone, I'm going to take still this as the base. This is going to be my base here. So I'll say 160 divided by 10. 160 divided by 10. 5%. Is this clear or not? Now, if I say growth percentage, annual growth percentage, everyone, how much is for this and this? Here it is going to be 130 divided by 110 minus 1. It's going to be 18%. No, Anand. Anand, you are taking base year in this. You are taking base year, Anand. Year on year, we don't take base year. We take 160 divided by 130 minus 100. Year on year, what is your performance? Your appraisal is happening. You will not say that I have joined the job 15 years before. From that, I have this. No, year on year, what is your appraisal in that? 160 divided by 130. Right. It's approximately 23%. This is annual, everyone. And this is also. Any confusion here, guys? Any doubt? I have done with you vertical analysis, guys. If you remember, 2020. Now, hear me out carefully. This is a little confusing, and unfortunately, this is not mentioned in your book. Please hear me out carefully, guys. Sales 1,000, 1,200, 15. Gross profit 100. Point clear? Can you please tell me gross profit percentage? Can you please tell me gross profit percentage year on year? That means as per vertical analysis. I'm talking about vertical analysis. Okay. How much in 2020? How much here? How much here? So this is going to be everyone. So try, guys. I'll wait for you. Please try, guys. This is helpful for you. Simple. Here, everyone. This is always 100%. This is 10%. This is going to be 100%. So it is, sorry, how are you arriving at this? 100 divided by 1000. This is going to be 150 divided by 1200. How much? 1240. This is 160 divided by. How much is this, guys? 12.67%. 10.67. Is this point clear or not, guys? This is vertical analysis. Point here. Is it in a way? This is vertical, right? Now, when I look this way, if I start looking this way, guys, vertical, you have done it. Like, so you have done this, you have done this, you have done this, right? 3 years you have done it. But if I look this way, guys, is it automatically not horizontal? Horizontal or year on year change? Is it not automatically the same thing, guys? Am I not automatically getting the horizontal analysis like this? If I see, let's say 10%, 15%, 12, 10%, 12.5%, 10.67%, am I not getting horizontal analysis? Right? That's my point. Horizontal or year-on-year analysis. Yes, no, maybe. Come on. No. No. This is the same question. I'll let the question be same. I'm doing the same question. Let's say on year or maybe base year, horizontal every. How much is going to be horizontal here, guys? Horizontal, if I compare here to here, how much percentage? No, just sales I'm talking about. It's 120%. So this is going to be 1200 divided by 1000 into 100. It is 120%. This is 1500 divided by 1000 into 100. So it is 100. Point here. Here. 150. 150 divided by 100. 150% everyone, and this is 160 divided by 100 into 100. Is this clear, people? Yes, no, maybe. This is horizontal level. Horizontal. Now, if I do year on year everyone, something which I was discussing here, everyone, is not coming same everyone. If I'm doing year on year growth everyone, from here to here, how much would be? 1200 minus 1 divided by this minus 1 into 100. It is 20%. Point clear, guys? Here, what is going to be? 150 divided by 100 minus 1 into 100. It is 50%. Same here, everyone. It is 1500 divided by 1200 minus 1 into 100. 25%, am I right? How about this? 160 divided by 50 minus 1. Correct. 6.67%. Is this clear or not, everyone? There's no one. If I see here, everyone, this is year on year. What you have done here, everyone. Here it was coming. See, I'll just compare for you. 10, 12.5, 7, 10.67 everyone. Just delete it. If you see here, that was my vertical everyone. But that's year on year everyone. They are not same. They are not same. Please understand. Vertical say that was in this year. In this year, this is your gross profit. This is your gross profit in this year. This is your gross profit in this year. Point clear or not? But year on year or horizontal says, boss, if you go from this year to this year, growth is 50%. If you go from this year to this year, growth is 6.6%. This is different. That's why this is different, everyone. I hope the point is clear, guys. In the year on year and the horizontal, the differences between the base year and the previous. If I compare it in a simple way, if I try to do it in a more non-finance way, guys, is maybe I can say that when I was in 8th, maybe I'm having English, maths, science, social studies, and maybe Hindi. Total marks is 500 everyone. Okay. And here maybe I'm getting 60, 80, 90. How much is this? 60, 40, 140 and 90 is 230. 230 and 70. 300, I guess. And let's keep it 50. So can you do the total for me? How much is this? Is it 350? 350. Thank you. So how much percentage is that? If it is 500 out of 500, I'm getting this. So I'm having almost 70%. Point clear, guys? Yes, no. Overall, it is 70%. But forget about overall. If I'm doing the vertical, everyone, then how much is the maths from the vertical analysis? 80 divided by 350. What is the answer? So 80 divided by, so my bad. Yeah, 80 divided by 350, let's say that. Or let's say, sorry, my bad. Let's say 80 divided by 350, 500. 80 divided by 500. What is the answer? It's approximately 16%. Point clear or not, guys? Yes, no? That's vertical. That is vertical. I'm doing it with the total sales, everyone. I hope it is okay, people. But maybe everyone in ninth, again, 70, 98, 60, 70, 60. Again, if I'm looking vertical, everyone, again, I'm looking vertical. How much is your sale? How much is this in the vertical wise? Again, 98 divided by 500%, everyone. How much is this? It's approximately 20%. Point clear, guys? That means overall it was 16%. Now it is 20%. Very clear? Yes, no, maybe. But if I'm looking the horizontal or year-on-year performance, what is my growth, everyone? In maths, what is my growth? Is my growth 20%? Is my growth 20%? That's what I'm just trying to tell you, everyone. Don't link. When I'm seeing the same number like this, don't say that this is my growth. How much is my growth, guys? 98 divided by 80. 98 divided by 80 minus 1 into 100. Which is 22.5. So that's my growth having. From here to here, when I'm going, it is 22.5%. Point clear, guys, what I'm saying? Everyone? That is the difference, guys. It's not very well defined in the book, so I just want to discuss that one. Should I move? That covers, everyone, our first module, everyone. Easy topic, nothing complicated. That finishes our first module. That's it. All of these MCQs, I'll try to do it in the class only, everyone. That finishes our first module, everyone. Easy, nothing complicated in the first module. Easy, easy. Remember this. Then we will get the doubt. Please allow me, please. Show you credit tomorrow. See, basically, I just want to tell you what I'm trying to look in this book, which I could not find it. For example, here many are places. I was just looking but annexes, but I could not find it. I was just looking at that many people get confused that what is these referencing which is given. LOS 2A point, LOS 281D. What is this referencing which is going on? Everywhere is a referencing. Unfortunately, my book is not getting open in that case. I'll show you sometime later also. Problem in that. But it's just not too much matters to you guys. So basically what happens, guys, IMA issues the IMA is this book is created by IMA. Is the IMA has created this book which you're reading? No, this book is obviously not created by the IMA. Everyone. IMA gives you the guidelines, everyone. They give you a guidelines. They'll say that you will do the vertical income statement, maybe horizontal, maybe year on. So they'll give you the references that these are the topics you should cover, everyone. Point clear, everyone? How should you define that topic is used by the various review provider. Backer is one of them. You might have heard about, or you might have heard about Leave. Like this, there are many reviewers, everyone. Point clear or not? For example, if you do any course, let's say you're doing school, everyone. School is providing you the book, college is providing you the book, but here, everyone, your institute is giving the guidelines, and on that basis, the other people are creating the book. I hope the point is clear. So, and here there is a number for that. Let's say LOS 1.3 in that case, LOS 1.4, learning objective in that case. So that referencing is mentioned in the book. That's all. But should we learn that or something? No, absolutely not relevant for your point here. Because for you, your book is your book, Bible in that case. Nothing you have to read beyond that. I hope the point is clear what I'm saying, guys. Sugar clear. Before I move, guys, I'll take 5 minutes. Which is the MCQ 2-3 in the book which is mentioned? MCQ, this is mentioned in the book 2-3. Yeah, so I'll not do it here now because all the MCQs I'll do it from your portal only, and obviously these numbers are there in the portal. So we'll do all the questions automatically. These questions will also be done. So individually you don't need to do these questions. because already you are going to practice. These are just the 3 questions in your portal. We have almost 2000 MCQs. So we do that. Okay. Before we wrap for today, everyone, a tiny piece I can cover today because otherwise we'll be left with. So I'll cover with one tiny piece, everyone, before we wrap for today. The rest tomorrow I'm going to start with a new topic. If I talk about any ratio analysis, everyone, if I talk about any ratio analysis, ratio will have 2 elements, everyone. One is going to be the numerator. Second is going to be the denominator. If my numerator is going up, guys, if my numerator is going up, ratio will increase or decrease? Ratio will decrease. Guys, let's say my ratio is, this is 160 and this is 100. How much is my ratio coming? 1.6. If tomorrow I make it, instead of 160, I make it 180. What would be my ratio? 1.8. So obviously ratio is going to increase with that. Point clear? Now, if I increase my denominator, ratio will increase or decrease? Ratio is going to decrease because obviously my base is become larger. Whenever the base is becoming larger, the ratio is going to go down. Simple maths, everyone, nothing complicated. Let's see, everyone. If the numerator goes down, ratio will increase or decrease? Ratio is going to decrease, obviously. And lastly, everyone, if I'm going to decrease this, ratio will increase or decrease? Ratio is going to increase, obviously, because my base has become, my base has become very small. That's why ratio. I hope point clear. Simple maths, everyone. Should I move? I am on page number 14. Quickly read and confirm. Read all of it. Read the entire class team up till here. People who do not have the book, I'll open it for you. Please read and confirm. Leverage part, I'm going to do with you full chapter on that. So I'll cover that leverage. Where is it? Is it in the book? This leverage. I'll cover that later on. Part. All the ratios I'm going to do with you. Liquidity, leverage, activity, profitability, market. Every ratio we'll discuss it in multiple versions. Don't worry. So read this completely, but let everyone read. I'll come back and discuss. Where is quantifier? Sure. Let everyone finish. Done, everyone? Oh. So then I'm done. Any other question barring the quantify? Any other question barring the quantify? Okay, let's see. Financial ratios are used to quantify the relationship between the items and the entity's financial statement. Yeah. It's quantify. Is it the English? Quantify means I'll quantify what is the relationship between the two items. I'm going to measure it. I'm going to measure it. What is the relationship between the two elements in a financial statement? For example, we have calculated the gross profit, gross profit percentage. What is the formula here? Gross profit divided by the sales. Point here. So financial ratios are used to quantify the relationship between the items. So that shows the relationship between the gross profit and the sales. If I sell you, let's say $20, 20% everyone, what does that mean? That means if I'm making a sales of $100, how much gross profit am I going to generate? $20. Point here. That shows the relationship. It quantifies that. Clear? Clear? Yes, no? Okay. Let's try a few questions, everyone, before we wrap for today. Yes, everyone, what is the answer? Try. I'll wait for more people to answer. B, C. Give me an ABC. Rohit, give me an ABC only. B, C. Majority of the people is saying C. A useful analysis to compare the large accounting entry with the smaller one. D. Vertical. I'll go with majority. It's vertical, guys. Vertical. Remember Nike example versus my company. I told you I cannot compare both of them. I cannot compare both of them. My small companies versus the Nike. But the moment I convert them into the percentage, my percentage of the sales and Nike's percentage of the sales, now I can compare. So, yeah, vertical analysis, common sense. Clear, guys? In assessing the financial prospects for a firm, the financial analysis. In assessing the financial prospect of a firm, when we are looking at the financial prospects of a firm, financial analysts use a various techniques. Agree? An example of the vertical common size is any other answer? What C and A? It's a mix of both the answers. C, okay, then I'll go with the majority of it. Oh, guys. Advertising is the 2% of the sales. Remember, we have done it. What is vertical income statement, everyone? Vertical is when you're converting everything in the percentage of the sales. That's vertical. a comparison in the financial ratios. When I'm comparing, it's not the vertical analysis. I'm comparing that how much gross profit you are having, how much gross profit you are having. That's not the vertical. That's just a comparison. Point clear? Correct. This is very easy, guys. A balance sheet percentage of total asset, net asset percentage of net assets. Correct. Easy. Which of the following statement is true regarding the common size statement? You're saying common size statement can be used to compare the companies of different sizes. Any other answer? Here everyone is saying. Correct. Good. Which of the following statement does not represent a benefit of a vertical? Which of the following is not the benefit of vertical? It helps manager ensure the liquidity of the company. Correct. Yeah, you can compare. Just we are looking what is not the benefit. A is not the benefit. Is it visible, guys? Okay, mixed answers. I think it's a mixed answers for this question. Sales is given, COGS is given, gross profit is given everyone, and inflation factor is given. Perfect. No problem. Gordon has analyzed these results using the vertical common size to determine the trend. Right? You're doing the vertical common size so that you can identify the performance of the Gordon can be best characterized by which of the following. I would see the common size trend in is increasing and is resulting in the increasing trend in the common size gross profit margin. Any other answer? I got A as the answer also. Increased trend in the common size gross profit is the result of both increasing trend. Any other answer? D also I think. That you're seeing D. The common size trend in the COGS is decreasing, which is the increase in common size. Any other answer, guys? Come on, guys. Why so many answers? Anyone for B also? We'll have full ABCD now. Simple question, guys. I'll go with the majority C. Now C. If not C, then what is the answer? Think what is the second best answer? If not C, then what? A, B, 3 guys. What you need to do here, you convert everything into percentages. Have you done that, people? Let's see. So here, sales is this. So we have converted everything into vertical, 60-40. 60-40. Point clear, 60-60 in that case. Guys, is this okay or not? Yes, no? COGS is increasing or decreasing? COGS is increasing or decreasing? Increasing. Gross profit is increasing or decreasing? Decreasing. Obviously, everyone, when my cost is going to increase, so how do you arrive at the profit? Sales minus cost equals to profit. When my cost is increasing, profit is going to decrease. Point clear or not, people? So that's why everyone, I got the answer. That's why this is a mistake. Resulting in the increasing trend. There is no increasing trend. Point clear or not? I think you picked up the increasing trend because of this. Am I right? No. That's the increasing trend. It's rather the decreasing. Point clear? Common size gross profit has decreased as a result of the increasing trend in the COGS, everyone. A simple question, guys. I hope it is clear. Let's try one more question. This is very easy. B. B also. Shown the components of the financial statement. Sales is given. COGS, total asset, total equity, net. What is the percentage of the net? Guys, this is very simple. Why there is a different answer here? Yeah, I'll go with majority. Okay. Manish, why B? Simple. 120 divided by this. Clear? You have done the reverse ideal. That's why you're dividing net income with the sales. That's why you're saying 5%. Then there's not 5%, it is more than that. Yeah. No problem. Let me know once you have read. I'll go back down. No problem. That's why we are doing it, so that you will not do these mistakes in exams. Okay, give me a minute, guys. Okay. D, C, D. Which answers again? Okay, let's do it together. Company recorded the following comparative information for the first 3 years of their operation. Brilliant. Sales is given, cost of sales, and COGS is pretty much the same thing. Rent is given, salary is given, other expenses. Above this, which of the following is correct? The company is producing its product more efficiently. That means this is going down. Maybe that's why they are saying it. For each dollar of the sales, the company is paying more salary to the employees in year 3. What's this year 1? That means, is your salary increasing or not? For each dollar of the sales, the company is paying more. This is very easy to identify. Convert that into vertical income statement and see whether the salary is increasing or not increasing. I hope you have done that. Company is selling more products every year. Are you selling more products each year or not? How to identify this? I'll go with you. Majority of the people is saying D. Second best choice, C. C is the answer. Very simple, guys. I'll first convert everything into the vertical income statement. Point clear, guys? That's why 100, 62, everything. Cost COGS is increasing or decreasing, guys? COGS is increasing or decreasing? COGS is decreasing, guys. Decreasing. So that's why, everyone, is the correct statement that company is producing its product more efficiently? Yes. Because when I'm efficiently doing it, that's why my cost is going down. I hope it is okay. Now, I have converted that into percentage of that. From year 1 to year 3, my salary is increasing or decreasing? Salaries are increasing or decreasing, guys? Salaries is increasing. That's why each dollar of the sales, the company is paying more amount. Point clear, guys? Now, here, everyone, we are saying for a company is producing more product. We can't say with that information, everyone. Sales will have two elements, everyone. One is the number of units. Selling is the selling price. Selling price is not available, so we can't really say with that. Point clear what I'm saying, guys? That's why not this. That's why 1 and 2. That's why C. I hope it is okay. Great. I'll stop it here only, everyone. I'm sharing with you my LinkedIn and the YouTube. You can be in touch with me over them, everyone. You can search me with my LinkedIn also. You can search with my YouTube also. If you have any questions, everyone. Okay, I'll be more than happy to answer them. Few videos regarding the CMAs I have uploaded. I keep uploading on the YouTube also, so you guys can check them out also. Any query you have it, you can post me on the LinkedIn also. You can post me on the WhatsApp also. Okay, I'll see you guys tomorrow. Tomorrow onwards, we'll start at 6 o'clock, everyone. And then I'll take up whatever queries you have. These questions, Sabha, you will find it from your Becker portal also. If you don't have the access of your portal, be in touch with the team. They'll help you out. Right? Thank you so much for your time, guys. And I'm looking forward to see you tomorrow, guys. Tomorrow, 6 o'clock, we'll start. Okay. Bye-bye. Good night.